Hello students, in today's video we are going to solve another problem based on net payment method of purchase consideration. So let us now go through the problem and try to solve the problem. N Limited agrees to take over the business of M Limited on the following terms. The shareholders of M Limited are to be paid rupees 30 in cash. An offer of 5 shares of rupees 20 each in N Limited for every share in M Limited. M Limited has 70,000 equity shares. The debenture holders holding 8,000 debentures of rupees 100 each are to be redeemed at a premium of 10%. Cost of liquidation amounting to rupees 60,000 is borne by N Limited. Compute purchase consideration. Okay, so here there are two companies. One is N Limited, another is M Limited. N Limited is purchasing the business of M Limited. So here N Limited is the transferee company. It is purchasing company. So it is transferee company. M Limited is the selling company. So it is transferor company whose business is been acquired. Now following are their terms of purchase. First one, the shareholders of M Limited are to be paid rupees 30 in cash. Look at the first word, the shareholders of M Limited. So this is the payment which is made to shareholders. So this is to be considered while calculating purchase consideration. Okay. I read it once again. The shareholders of M Limited are to be paid rupees 30 in cash. So the shareholders will be paid rupees 30 in cash. So this we are going to consider while calculating purchase consideration because it is a payment that is made to the shareholders. So this is our first point. Second one is an offer of 5 shares of rupees 20 each in N Limited for every share in M Limited. Okay, so for every share, every means for one share in M Limited, they will get 20 shares in N Limited and the total shares are 70,000. I'll show you the calculations later, but I hope this point is clear. This point speaks about the payment made to shareholders in the form of cash as well as in the form of shares. Both will be considered because it is a payment which is made to shareholders. Let us look at the second point. The debenture holders holding 8,000 debentures of rupees 100 each are to be redeemed at a premium of 10%. So this point speaks about debenture holders. Now, while calculating purchase consideration, we don't consider any payment made to debenture holders or anyone else except equity shareholders. So as this payment is made to debenture holders and not equity shareholders, this will not be considered while calculating purchase consideration. So we have to ignore this point. Why? Because it is payment that is made to debenture holders and not equity shareholders. So we have to ignore this point. Next, cost of liquidation amounting to rupees 60,000 is borne by N Limited. So here they are speaking about cost of liquidation which is borne by N Limited. Now N Limited is transferee company or the purchasing company, and if the purchasing company is paying liquidation expenses, we have to consider it in purchase consideration. Okay, so this will be included while the calculation of purchase consideration. So the first point and the last point will be included to calculate purchase consideration, and second point will be excluded because it is payment made to debenture holders. Now let us analyze the ratio of M Limited and N Limited. Let us read the first point once again. The shareholders of M Limited are to be paid rupees 30 in cash. I hope this point is clear. Now from the second sentence we have to analyze. Offer of 5 shares of rupees 20 each in N Limited for every share in M Limited. So here there are two companies, M Limited and N Limited. So for every share in M Limited you will get 5 shares in N Limited. So 1 share in M Limited means 5 shares in N Limited. What is the actual share of M Limited? There are 70,000 shares. Okay, so for 1 share you are getting 5 shares, but actually M Limited is having 70,000 shares. So how much shares will they receive in N Limited? So we have to do cross multiplication. 5 into 70,000 divided by 1. So basically we have to multiply 5 with 70,000. So you will get the number of shares that M Limited will get in N Limited, and the shares are of rupees 20 each. So you have to remember this calculation. 5 into 70 you will get number of shares. So to that number of shares you have to multiply 20. So that will be your purchase consideration. Okay, so first we will consider the shares, then the payment made in cash. Okay, cash is nothing but, see here, the shareholders of M Limited are to be paid rupees 30 in cash. So every shareholder, they are having 70,000 equity shares. So for 70,000 you have to multiply it with 30, because they are going to receive rupees 30 in cash and remaining in shares. Debenture holders we are not going to consider, and the last point is to be considered because the cost is paid by N Limited, 60,000. So we will include this also while calculating purchase consideration. I hope the problem is clear. Now let us look at the solution to the problem. Now first we have to write calculation of purchase consideration, then mode of payment. First I will take it in the form of shares. So as I explained you, for every 1 share they are receiving 5 shares. For 70,000 shares, question mark. So we have to multiply 5 into 70,000. Okay, into the value of each share is 20. So 70,000 into 5 will be 3,50,000 into 20, that will give us 70 lakhs. Okay, I hope this calculation is clear. 70,000 into 5, that will be 3,50,000 shares into rupees 20, that will amount to 70 lakhs. Next is in the form of cash. So rupees 30 is paid in cash for 70,000 shares, that will amount to 21 lakh rupees. And finally the cost of liquidation, that is 60,000 rupees. Now we have to add all this to get the amount of purchase consideration. So purchase consideration is 91 lakh 60,000. Okay, I hope the problem is clear. In this problem you are supposed to pay attention to the ratio that is given of shares and what things are to be included and not to be included. One simple trick is to remember we have to consider only the payments that are made to equity shareholders or the shareholders, except that no other payment are to be considered. Okay, just like any payment made to debenture holders, creditors or anyone else. And we have to include liquidation expenses only if they are paid by the purchasing company. So in this problem, as the liquidation expenses are paid by purchasing company, we have included that and calculated the purchase consideration. I hope this problem is clear. Okay, we will conclude for today. Thank you.